high time frame stuff.
Kibble, Winter, Turtle, all on fire. Everyone dying.
So
All of them.
yeah, just inside these big fat candles that you see here, there is actually support
Chapter
levels.
13.
And that's pretty much where price was targeting and what's held it
More
up.
than once, dragging her back to herself. Moon, it's not real. You're all right. She staggered up and caught herself against the rough stone side of the tunnel. What do you mean it's not real? She asked. Her heartbeat was too fast, squeezing her chest so she could hardly breathe. I mean, it could have been, but it won't be, he said. Whatever that was, it's in the History Cave. Stay away from there, and the vision returned, fiercer and more agonizing than before. Now Moon was outside the History Cave, and fire was pouring out into the tunnel, along with the screaming, burning figures of her friends. Kinkajou stumbled to the ground in front of Moon.
So you've got the concept of cycling,
which is where basically if price is going to reverse, it needs to spend time in accumulation. So looking at this, on a daily perspective, you've sort of got 1, 2. You don't usually label the exterior trend as part of the cycle. So 1, 2. If this was to close there for the day, that would be 3. And then as this trend starts to compress to the exterior, it's normally getting really close to a breakout. The fact that this hasn't lost, that was its initial created daily support trend. The fact that it hasn't lost it at all since there is really, really good, because this is not a loss. Like this, you can wick below as long as you close back up. If that had, actually opened something below here and closed down, then effectively it changes. That becomes that, which doesn't work. So Bitcoin actually looks really good, just on a daily / high time frame. And this sort of pump up like this, you often see this before you see a move. Like, it's not scammy. Like, what it's doing is it's trying to clear all of the resistance that basically lives on the underside of this. So, all of this stuff, like, that was a range that once supported price. It's now something that rejects price, but it's only going to reject it a certain amount of times. So when you see price shooting up like that, every single low time frame range that existed inside that run up is cleared. They're all done. And that gives the price now the ability to move back up. So it's actually not, really doesn't
Yeah,
actually
but
look
isn't
bad.
it inverse the same? The equally harder crash also erased all support.
Yeah, correct. Yep. So I suppose it's like the thing in charts. Any time it can go up and it can go down, it just comes down to whether it's holding. At the moment, it's holding. So if that closes in that particular spot in 4 hours' time, it can open the next candle here, which basically can move on to break that interior. That's why the wick on the bottom like this is actually quite good in a flat top, because the moment that candle closes, it creates that new interior trend. And if it creates it exactly like you see there, then the new one opens on the other side of the trend already. So then it's got a 50-50 chance of breaking that interior trend. Like, if the wick is really, really big, like down here, if the wick is really big on the top side, then the new candle is going to open under the trend. It has a 0% chance of breaking that trend on that day. It just can't do it because it's below the trend. So, just how these candles physically open and close and the angle of the trend actually gives you sort of probabilities of what can come next on the next day. But still, the probability is 50-50 because but it's better than 0. Like it was 0 down here. That became 50-50. That the angle of that and that trend, unfortunately, the trend's too flat, so that became 0 chance of breaking it. So, see how that works?
Yeah.
Angle of trend, wick to the top of the bottom, how it closes gives you probabilities of whether or not you'll break. and your probabilities are either going to be 50-50 or 0. So, you know, if it's 0, you're not going to take a long. If it's 50-50, then you could be looking for an entry. And your entry would be on support. So, like if this closed exactly as you see here, you could then look for entries either on the backside of that trend, or you could look for entries along this support trend, or you'd find some kind of horizontal level in amongst that move up, because this big wick on the bottom there, that means that everything from 1 second range to a daily range has basically been closing in an upwards direction ever since that candle was at that point. So there'd be a lot of support inside that at lower time frames for scalping.
Yeah, seems like I was too confident about the candle breaks from the 8 and 12 hour, but as we know, things don't always go straight from A to B.
Yeah.
So I still kind of feel like this, despite there being multiple things in play, it feels like a late short, scam pump, hunt, whatever. Because it's smooth sailing through all resistance, also higher time frame stuff, really important range entries from the very left of the whole chop range.
I mean,
lows and just smooth sailing through it. So,
if you take all of this out, well, let's just get rid of all this. Show you how this goes on the high time frame. So at that point there, you've pretty much got nothing. You've got this, which is going to try and act as support until it's hard closed under. You've got that, which is lost. So that was there. Technically it was there. So there was a short, and the price has come back up. That's at that. This is going to try and act as support. Once it gets hard closed under here, it's going to lose it. So that candle technically could still reverse. That one turns that into resistance. And any other range that it broke at the same time, which is also going to be that on a different time frame. And there'd be something in that because it's such a big candle, but that's pretty much, those are the areas that you want to mark. That one comes into play now with that candle. You don't have really much to work with here on a daily. You've sort of got that as a trend, and you've got that as a range high. So this candle gives you your ability to do your first interior trend. Now, if that interior trend breaks, it's going to target one of these resistance levels, and you know, it could actually go as high as one break of that downward range could actually send price as high as that. But it's probably not going to target that.
Yeah, I mean, we got that all quasi on the Trump pump, right? So it hit like 95.
Yeah, but I guess the thing is, like, you got to look at it from this direction. Sure, some guy puts out a tweet and the price shoots up. But watch, just to say, for instance, you hadn't even paid attention to that and you didn't know what was going on in the world. Okay, that candle doesn't break trend. That one does. Long. Just long. Because the minimum level that this is going to go is here. There. And this resistance here is the one more local to the fall, right? So that's probably about your highest target. And these could stop it, but there you go. So it went and hit the one local to the target, or local to the move, which makes sense because that would be the place it would go. So, you know, if you didn't have an X account and you weren't sitting on Discord and you weren't talking about any of that kind of stuff, there's two places that a broken range will target. It'll target a level that's designed to ladder the price down and keep the price going down, or it'll target the top of the range, and if it hits the top of the range, it's going to continue to go up. And it'll retrace because everything rejects off the top of ranges, but once it retraces and finds its support, it will continue to go up. And if it doesn't, that creates a really solid breakout level for the future. So that there, breaking that line, because of this fall and because of the lack of resistance tightly down here on a like-for-like time frame, was going to lead the price to that. It's just...
Oh, it sounds like there's kind of no more weight about FIPS and
Yeah.
candle breaks as heavy as...
Yeah. I mean,
what I talked about.
It is literally just normal. The only difference between that tweet and, you know, what just happened there is it moved faster. And so news just takes price to where the target is going to be. It just does it quicker. That's probably the easiest way to think about the effect of news. Is it just adds speed, which is great because you didn't have to wait 4 or 5 days for it to go back, you know, and retrace 4 or 5 days. It just did it fast. So, you know, it's no different than what you see here, except sometimes, and this is where you just don't get a trade. You know, that was a target level there, and that was a target level up there, and this candle here both created and went into the actual target within one candle. So there's just simply no trade. You know, that's kind of similar things happened all the way through here. You know, whenever you got a break, it just went to the target in the same. I mean, you could have got that one there, little move, but so you tend to get pretty decent trades after you have sort of a decent pullback like that, and after it breaks through. But when it's kind of going sideways like that, it's a little bit tricky. There's that one you could have got. That was your range high target.
Like we are only looking for upside. What supports the idea for downside breaks? Because obviously we're in a larger downtrend also. So
well, it's not really any different. As you can see, just turn your chart upside down. So if you're looking for a break to the downside, it's going to be a break of trend like that. Yeah. So break of trend there, and it's going to target a range top or a resistance level. So everything that works to the upside is just going to work to the downside. So 1, 2, skip that, 3, 4. See where this is going, eh? 5, dump.
Mm-hmm.
1, 2, 3, 4, 5, dump. Right, so it's, if we flip it back the other way, there you go.
Yeah, really hard to grasp this kind of random rally right now from nowhere. Just popped obviously straight into liquidity again. So
just a daily trend break with, you know, resistance and support really, really high up. What it didn't do though is it didn't hit that. Okay, so you had your targets under here, which is where it actually was that one. So you So you had your targets under here, and you have your range top. Now, if it doesn't break the range top, it's not laddering up. So that's the thing that kind of points to there being more downside, is unless you actually see, the price break that second line, then effectively it's just trying to ladder down. It's a bit of nowhere land really at the moment, because that'll be your break of range there. It's reversing.
Yeah, that whole pump and dump was a bit of no man's land to me. Just after it finished, and the 8 hours and 12-hour candle breaks checked in really is when I thought, yeah, okay, now we have like confirmation of it going lower. Obviously, price doesn't agree right now.
Yeah,
so
well,
it's-
the thing is we didn't close down here, and that's why it didn't go lower. Didn't close
no,
yet.
not the daily, but again, the 8-hour and 12-hour FIPS candle breaks.
Let's have a look at the 8 hour.
The daily missed by $100, but if you have like,
The 8 hour range is down here.
and if you span the usual FIP from the top through all the 8 hours and 12 hours that were taken in the same move, and you get to 77k.
Which ones?
So, yeah, from the pop in the middle, straight to how you draw FIPS usually. From
Do you mean
little
do you mean that? Do you mean that?
No, just the one that was in the last 2 days,
Oh, this.
from top to bottom. Yeah.
Well, that's actually that. Which
No, only the engulfing is at least how I used to draw things. So the 4 down, engulf like, I don't know, 7 up.
and that's that'd be a different range.
Yeah, and if you move the one line to like 2 or 3 candles to the left, then at least that's how I understand and apply the FIP system. So the engulfing.
even that one didn't actually. Even that didn't technically break. That didn't technically break. That did. There's not really a lot of safe shorts in there. Like,
Maybe I can share quickly, then you know what I mean. Safe, as always relative speaking.
yeah.
But this pop right now is so fucked up the last 2-3 days. Really, it's playing with my head.
That's probably going to play out at some point.
Here, if you want to look, started sharing.
Yeah.
If I just go by the usual FIP drawing as we learn to be, so these 4, 5 down, and go with all of these, and then you get your targets to 77k. Entry goes by 84k. Such do the 12-hour basically. Just one candle prior.
So you'd have to, for that to work properly, you'd probably have to find a time frame where there's a. So what are you on there? You're on 12. If you go to the 6. So you've got 1 red candle in there. Try to find a time frame where you got 2 red candles followed by a series of green.
This one, 4 hour. Yeah.
Yeah. Okay. Now take. Yeah, so that will probably. Oh, actually, it didn't. Yeah, that might. So that's that. One, two, three. Yeah, that should play out at some point. It'll be that.
Um,
7773.
Isn't that the base principle? Like any time frame sequence of one directional candles got
Yes.
broken by other direction sequence of candles?
It takes 2 candles to create a range. So those 2 are a range. And then that whole lot there is a range, even though it's got a couple of blue ones in it. Doesn't matter. The whole lot's a range. And then this whole lot down to here is a range. So that there, broken by that there. And as you can see, it did create that resistance for a while. And then it said no. But, there's always a 50% chance it comes to here anyway.
And what I said earlier, there are always multiple things in play, so the explanation from you earlier also makes sense with the arrays and the support from the very left and so on. The price like almost never goes straight up and straight down. So
no,
especially we're swinging. So if I had to draw out something, despite the short squeeze that exactly ran to 88.5 on the heat map, which we just completed. If I would not look on the heat map, I would. Where's my drawing tool? Then you have like just swinging up, making major resistance at the top, swinging down, finding some support, bounce back up, make a new lower high, and then go for final blow. Like not straight, it always jiggles, but I didn't see this pump coming. I could have gotten a better entry, but I guess we are not. The lows are not in still. But what do I know? Maybe it could prove 250k on the next Trump tweet.
Well, let's have a look. And if we just chuck one little line on here, so that candle opened then. That one. So when did that open?
I mean, this very, very, very heavy momentum shift. That's all what the FIB concept, when we discussed a lot about, is actually about like how money flows over time, and if you have such huge unload that goes so much faster in one direction than the other, then you have like an echo later.
That upswing there, that was your close and open of your trend break. That was your pump based on that break. And there's heaps of resistances in here on 4 hours, but this is kind of your case in point. This is a daily activation here. Nothing in here was going to stop it. It was just going to do that because that was the first thing on a daily that was going to be able to stop it. And then retrace, because what it hit up here was a daily. So once again, nothing through here, which is lower than daily, is going to support it. So there's your retrace down.
Yeah.
And the first thing that really had any hope of supporting that was just that, which it seems to be doing. So here's the thing, like, you've got a 4-hour structural short down to 77, but you've got a daily support trend. So you've got to get through that if you actually want to get down there. But the thing is, this is going to be stronger than that short. So it'll play out eventually when that daily collapses. It'll like we've just seen, like particularly on Sol, there's a whole bunch of shorts that just got filled, because they when eventually the high time frame just collapses, then everything below it that's sitting there waiting to be filled gets filled.
Yeah, that's where looking at multiple things at the same time makes sense, because I didn't watch the 1 hour, and what I've seen, this downtrend pinching its head slightly above, and then to put the retest, I wouldn't even have considered shorting, because it's also just an easy trade for a pop. That's a long right here also. So many things show the same things often enough.
Yeah, like when you look at it on lower time frames, it becomes relatively clear. Like often spikes like this.
Yeah,
although
that was
they
the open short squeeze that hit exactly all liquidity to the penny.
Yeah, which clears every single piece of resistance that's through here. And once it's done that, the older stuff, so older being stronger than newer, once you've got something like that and you've cleared all the older, then it's way easier for something to then move. So it's
That's a good point, yeah.
yeah. So you often see price ranging, and then you'll see a wick up, and then it comes
Yeah.
down, and then it goes up again. It's just that pattern you see a lot of the time on charts, where it drops it up, down, like that. Now, if it gets above there, that's the important thing. That's when it can, take off. Which is
Yeah.
what it's done here. It's come along, it's ranged, it's created a whole bunch of resistance and supports. It's cleared them, and then really it's what side breaks once it's cleared them, because once it's done that, it's just living in that. And
Yeah, it also went
that.
almost straight to the silo first on this open pump. And then, as you said, it cleared the resistances and then had an easier game after
And it
taking
found,
it also.
So it basically cleared the resistances and then found older support. So if all the resistances are gone and the price dips down and then it finds some older support down here. Oh, hello. See how accurate you can be with that shit? So it clears resistances, finds older support. So the thing that's in play now is supporting of price from a historic level that is way more powerful because it's back here. That's going to go up.
And that's what's creating those swings up and down, even if you have a higher time frame direction is obviously down.
Wish I'd taken that. Hello.
Yeah, me also in hindsight.
I had not been watching the 5-minute chart on Bitcoin.
Nothing better than hindsight entries.
Yeah. Well, because of this, but it's again, it's that structure. It's see back there. Range. Tried to break, couldn't hard close below, created a reversal, and that was always going to be a really strong support for the future. It was a bloody strong support for the future. Sent the price up $6,000. Crazy how a 5-minute bit of disrespected structure can move Bitcoin by $5,000 or $6,000.
Yeah, also, as I said, as soon as the Psylo, which is significant every week, was taken, even it was cringy grinding against, that made me feel like it was a bit sketchy because there was like no volume while it grinded into it. But yeah, obviously it took another leg up also. So
And that's just
mysteriously stopped right at the liquidity. So it's at the yellow fat fleshy late cake shorts.
it's a bit chicken and egg, eh? Like you just don't know. Like do people put their liquidations and stop losses where the price wants to go, or does the price create the structure because it knows people are going to do that? Or it's not really, I don't know how that actually works. It just always seems that the price structure points to it. It's almost like it's a warning. Like if you're in a trade and then the structure starts to point towards your liquidation point, you should just close your fucking trade. They're coming for you. It might not be today, but it'll happen.
Yeah. Yeah, and the 3 months heat map is still very scary. So little doubt those FIP targets to 77k, where all the juice sits.
This is looking quite good. So that's a breakout level on a low time frame. There. This is how you spot them. So that was the trend at the time. And that was your range high. And so range highs, when they're hit, they're always going to reject, but it's a case of do they reject and break down a trend, or do they moved? So went to there. Been hit. So now what comes next determines the importance of that range high, because there's tons of range highs. You know, every 2 candles is going to be a range high, 2 or more. If it actually breaks below that trend, closes a candle down under here, that becomes a very pivotal level, pivotal, is that right? Level for the future. So there you go. So that's broken down trend off that level. So you can basically mark that as a breakout level for the future. If price closes a 15-minute candle over that, then it'll springboard up. So down to there, down to there. We haven't got to that one yet. So that there was your back test. So that spike up to there was clearing that range top. Then it rejected. It's come back up. Closed over top of it. So the next stage really for this thing is to get over here. Oh, not a great looking candle, but if it closes a candle over here, then it's going to propel off this and then head up to whatever its next level is, which is going to be something in here. You'd mark all of these out just to be safe, because there'll be ranges in these just on different time frames. Hence support. So this here also became a breakout level, which it's closed above now. So that would have almost certainly broken the trend in the moment. Maybe. Kind of got created on the way. Yeah, kind of got created on the way down and then actually broken. So maybe not on that one, but it's that's looking. It does actually genuinely look like it's trying to recover. How high it goes is a whole other question. Any one of these could be the end of it. But once it closes over this, once it's over there, ultimately that's where it needs to go if it wants to continue an upwards trend, which about 59. And these sort of areas of resistance that kick in from about 50 through to 50, well, pretty much through to 50, what's that, 56? Yeah, 56, 57. These areas that are all, starting here and traveling upwards to there are the things that are going to try and say, no, let's continue a downtrend. So it's just...
Yeah, that's what felt so wrong about Bitcoin's move right now. It's just smooth sales through all resistances, like if it was nothing. So
yeah, I think it just...
that's how it goes.
It's just because it's high time frame. Like, it sails through all the lower resistances because all it cares
No,
about
it's
is
actually decent levels from all the 2 months chop to the left, but just my lines on the in the sand, so maybe they mean nothing after all.
it would be...
So weak lows from the chop entry range.
We got, yeah. That would have been a relatively important level for the future. You can kind of see how some of these higher time frame levels, like that one, yeah, just continuously kept the price up until it didn't. But you see what happens when you lose a level like that too. Like that's your Goblin Town type shorts. Does anything much like that? Bigger. Yeah, we haven't lost that. So the weekly structure on Bitcoin is basically intact until we open and close a candle below that line. And really kind of has to be below that one. I mean, the day that... What do we got? We've got 5 days left to go in the week. If you see this below this line, we're in a fucking bear market. That'll be the end of it, because that would be a weekly range break, a really big ass weekly range break, and that's probably just that's what you don't want to see, and it can't happen on this candle because this candle started above it, and if this candle gets back up above either of these two lines and closes that way in 5 days' time, it can't be the next one either. So it's really got to be something that completely opens and closes it. But if this candle closes right there at the end of the week, then you got a 50-50 chance because the next candle could go up, could go down. And
sorry, why is it 50-50 exactly at that place? And
well, it takes a distribution candle to break a range to the downside. And you don't know that, like, so if it opened a candle there, that candle's got two choices. It can close up or it can close down. If it closes up, then that's fine. It doesn't break the range. If it closes down, then it does break the range. So closing at that exact price point right there and then doing another distribution week is a 50-50 chance. But you would also have that at that point. So it could be, like if it just closed right there, it could be quite a scary week because it could come down, hit that, then go up, in which case it doesn't break. Or it could go up above here, open the next candle, come down, go up, open above here, come down, doesn't matter, it's the next one. So you basically, right now it's in a position that if the week closed right there, you got a 50-50 chance of a complete structural breakdown on the weekly. But as soon as it gets above either of those two lines, I'd feel a lot more confident above that one. But as soon as it gets above either of those two lines, if it closes the week, then you have a 0% chance of a structural breakdown that week because it just can't do it from above.
yeah, that makes sense.
Yeah. And it only has to sort of maintain that realistically for another 3 weeks. Even, if this gets up above there, stays distribution, which is actually almost what you want. You want this candle to close, say, there. Because if it does close there, it introduces a distribution support trend under here. And then if it can hold that for 3 weeks, it can use that to continue moving up. You kind of want the week to finish down, but you want it to finish down above those two lines. And then you're still in a bull market. What a shitty bull market. Yeah. Lots of silent people. What does someone want to, any questions? What does someone want to know about?
Yeah, thanks.
Eh?
I just said thanks for going through Bitcoin.
Oh, you're welcome. You're welcome. Yeah. 50-50 chance of breakdown where it currently is. Closes up above there. 0 chance. Yippee. Closes up there but still stays down. Actually better because new support introduced on a weekly time frame. That's a summary. And then I guess we'll see what happens in the next 5 to 13 days. Should we look at the most hated coin in the market? This is a great one in hindsight, just because that candle could not break that trend. Like, it was targeting. But this is a very, very, very high time frame breakout level now. So
yeah, it never could close the week above 2021.
Yeah,
really crazy.
Yeah, so that in turn actually makes that one of those breakout levels where if it closes a candle above there, it moons. Yeah, so that's just need 1 week up there.
And then straight to the moon.
Yeah, and then who knows really what it'll do because there's no resistance at that point.
Share some of us going through the epic list and what we have on the roadmap. So I think let's keep this first slide as sales empty roadmap in progress / rollovers, and in that just keep the ones which are going to be rollover work. Okay. For us. So if it is Super Expedient
Mute someone?
attribute ingestion, that is
Does
net
it work or is
erasure.
that only for me? Do you hear him still?
So again, like
Hey, there's a mute button.
I will review these again tomorrow. So here's the thing.
there you
If it is a
Um,
pure
Yeah, so
rollover,
Sol.
means MDL, SPFI, work, Zodiac
Sol's
Feast,
kind of.
okay?
Here's your range top.
Those
273,
seem to be rollover.
breakout level.
Source and expand ABS. Anything else that's net new should be the net
253.
new area. Now, what we also need to make sure is for anything that's rollover and in progress, and you don't have to do that today.
Being supported on the backside of that.
You know, like for example, when I'm going through the epics, I
Yeah,
don't
it's trying to
see
break that.
Q1.
That's basically
SPFI, our work, because that is our data ingestion
Sol
activity. So I
in a
think
nutshell.
whatever our epic it is tagged to needs to be extended for Q1.
But
So those
high time frame support
rollovers
there.
and epic
That was your fantastic entry if you took that. And it's not as it's not as strong looking as Bitcoin's chart, but it's again not an unexpected turn of events. So there would have been an interior break. Yeah, so this candle was basically breaking the interior, but it decided it would just go the whole way all by itself, which kind of often leaves you out of a trade. But the problem is it didn't break the exterior because it started below it, so therefore, the only option it really had was to retrace back down. And unfortunately, that just took a lot of time, and because this is a downslope, time is going to go lower pricing until it found support off this from the past.
So only candles opening outside of a trend can confirm the break?
Yeah, the whole body has to be over it, and it must be in the direction you're trying to break. So if it was a distribution candle, it can't break it. So 1, 2, 3, 4, 5 couldn't break it. It took that one to break it. So that's the actual break of this trend. So
that's interesting.
So you probably wouldn't worry too much about that trend anymore. It's gone. This trend kind of led to this, but it's this one has flipped this trend, which is why if you didn't get that entry based off that, then you could have taken entry off that trend and you'd just be sitting there now hoping that it keeps going up. And so really it's got to get above this. And it doesn't always take like on some of this high time frame stuff, it can kick off, like it did there, it can kick off well before the actual close of the, if you just pick an area like this as an example. So you had no resistance in here. So you had no trend. Price was just going down. Still just going down. And then got a trend. Assuming it closes. Okay. So going to look at the daily. Here's your daily. There's resistance. That's probably enough. Yeah. Down it goes. So sometimes like you wait for the confirmation on the weekly, but quite often a daily confirmation will be enough to take the risk for a weekly move. Because if you'd waited for the weekly, in fact actually the weekly didn't really even break it. But Goblin Town. That was actually probably a daily. Yeah. It's kind of the problem with trying to trade trend breaks is if you adapt that to the daily, that was the candle that confirmed, but it was straight into the actual target. So just boom, down. So you would have you would have taken confirmation on that, not, and you probably would have been. What would you have targeted? You targeted that. So you could have taken confirmation on that, targeting the daily range top, or that, or that. Well, in fact, you just can't really take that trade, but you could have taken that, tried to target that, and completely missed. Not that. And completely missed the resistance on the higher time frame, which sent it in the opposite direction. And you could have gone on Twitter and bitched about how the market's manipulated. Or Wintermute's out to get you. But he just longed a daily into a weekly resistance. Right. So, questions? Must be questions from. Chuck them in the chat if you can't talk, because I think people might be muted.
So, how did you get the idea to like extend this to trends? Because in the beginning it was just candle breaks, right? As far as I remember, and yeah.
No,
So
I've always traded trends. The hardest thing is trying to find targets.
Actually, what I mean mainly is like to actually integrate these arrayed trend lines.
Mostly that was from my old school days of trading on stupidly irresponsible high leverage to try and build up a portfolio. Like you have to try and find those really, really fine entries because you can't just enter at the top of a range and let it swing and let it play out over time. You've got to find that really, really, really refined entry, which like these trends you're looking at here, we're talking on the same time frame, but what you can do is stuff like this. You find your first trend like so. It might be on a weekly, and then you drop it to a daily. Obviously, you've got to mark out your horizontal levels, but and then you move it to there, and then that would have been your trend break, and then you would have slammed into that weekly, and you would have lost your trade. Like that's because you didn't mark out your horizontals. So that moves to there. That becomes your interior. That becomes your break. But that's its target. It's not a very good trade to take either. But you might have been able to refine it down to a lower level. So if you take that down and you go, let's see, it's 4 hour. Break. Target. Okay, that breaks that. So now you're sort of starting to find something that's a bit more tradable. That moves to there. Creates a breakout level, but it can't close above it, so that's why it doesn't break out. But you could short that because when it can't close above it, if it breaks the trend, just that, you short that candle there. Then you have to look across to your left and basically say, well, what's the first thing that could support the price? So you got an engulfment over here. That these two candles basically contain an order block. That's the back side of the order block, which is why it gave that fast response there, and supported it again there, and there, and there. This is the front side of the order block. Because that had already been tested 4 times, you'd short that candle, and you'd probably TP there. Like, depends how risk adverse you are and whether you wanted to hold on to it, because that's the first level that could reverse price. So you could have been looking for a long in here, and you're just not going to find one, because obviously I think that was the start of the bear market. But once you see a range get disrespected, break, it creates a strong level. When it can't close above, breaks trend again, short, and then TP there, and then sit there and go, crap, I just missed out on all that, but whatever. Yeah. So there just really wasn't a long to be found in there, even if you sort of delved into it. Yeah. So there's basically like probably three core things you can look to trade. You can trade trend breaks where targets are either going to be range tops or resistances. So it's not a huge trade, but and the way they sort of coincide with fibs is once a trend is broken, it usually tries to find a support to then bounce off to go to its target. So if this is the resistance through here, and this is your fib trade down here, when that trend breaks, which is this candle, and it finds that support, it's going to go to that target. So that was your trade in there. If you just took all of that off your charts and just went, I just want to take fib trades, you'd put your fib there, and then that'd be your entry.
Why are you picking now both wicks? Isn't it just body and wick depending on direction?
It's fractal. So for example, this is, if you go to the wick, that's where the distribution started, and it came down. So that's basically the back side of the order block, which is why it reacted there. And then that's going to be the front side is going to be somewhere under here. So in this moment here, if you were fast, if we zip that back, in this moment, you could probably take a trade off that wick. Just that. So it's the same concept as a 1v2. The candle that's to the left is the backside of an order block, so therefore it gives a faster reaction, which is just that quick in out. And then the front side of the order block is going to be somewhere down in here, and that's going to be a bit more of a slower grind when it gets to it. Took off though, didn't it? So depends where, you know, how the structure is, because if we broke that down to a lower time frame, so what's that, 4 hours? There's probably 2 candles in here somewhere. Oh, there you go. 3. Sometimes there's 3 in an order block, but that's those 3 there. And they'll have different reactions in the future. One. That was your second level getting hit. And what happens on your third level? Third level hit. Yeah. That's so you can see like those 3 parts. They're actually they're basically the order block inside that one candle, and so the back part gets hit, creates a nice fast reaction. Second level hit, third level hit. So they basically control the movement of price through that range. And then after that, it's just gonna collapse. So if we play that forward, yeah. So it's done. So by the time this has come all the way down to here, nothing in there is important anymore. Now you're basically working with whatever was created. It's why you can't really see that, you know, you can't see too far into the future because it just hasn't been created yet. Now once you got that downwards move there, you know where resistances are going to kick in, you know, for the future, like those 2. Yeah, that was always going to create some kind of rejection. And as was that, those 2 candles were always going to create that short in there. it's probably something further back. And then when you get something like this, yeah, a big drop. If you have a big rise on the other side of it, then price is just going to blast through it. But if you've got actual structure on the other side of it, like this and this, then it's going to reject it. That's kind of the whole thing about FVGs. So you might have been targeting some resistance up here, but actually it's going to be something back here. So, yeah, like this is an example. There's sort of two, or maybe three quite important parts in there. That. Actually, a lot of important parts in there. All of that. So, this was always going to try and support price. That was going to have a go at it. Maybe in the moment inside there it did, maybe not. That's also a type of support back there, but didn't really do much. And that created that trade. That's probably the nicest trade that actually exists on there, was this to this, which was that candle closing above, which flips that to support, and then that moves to resistance, which is there. So it's only a $2 move, but it's a pretty clean, easy $2 move. And then if you're flipping it short, you've got that. Let's put price in there. That. So if you're flipping it short, this candle here confirms the break of this, and these two broken by these two with price reversing creates support here. So when the price hits here, it's going to go there. So that's where it goes after that. Don't know. This could support it, hold it up, send it up. You have to look and see if we got a trend, if it breaks trend, maybe. Let's see. No. Yeah, it just broke trend into resistance and then died. See, so if you're just taking plain fib trades, that would have been an engulfment, but it's an engulfment into an interior trend. So if you're looking to try and get a better entry on that trade, the first thing you'd be doing is be watching to see it break this trend, because it can't get to 158 without breaking that trend. I mean, it might just shoot up, hit it, and then dump down, but it has to get through here. That doesn't break it. Neither does that. Neither does that. It does. So instead of entering up here at 153, first valid time that you might look to enter that is going to be 149. But ideally you want to get through this one, because the wick on the top of that candle has created that. So still got to get through both of these to get to there. So that breaks this interior, but not that interior. That breaks both. So if you were going to take that trade now, it would be on that candle, which would be much better risk reward than entering up here, where you had all this stuff as resistance. Of course, so we've got to close over that.
And
1, 2, 3, 4.
that example now explains better on my Bitcoin short that waiting for some exterior or interior trend to break, to go back down, to then target this, rather than going by raw fib entry at once.
Yeah,
just
yeah,
because it's there. I mean, it is there, and price will eventually go there, but we don't know when.
No, and you can see why. Like, you know, the first engulfment that you see in a downtrend is in a downtrend. You know, so there's the obvious statement of the day. The first engulfment in a downtrend is in a downtrend. So you've got an engulfment, but you need to break the downtrend, otherwise you can't go to the target. So as you can see, it's working its way through the various levels of accumulation. So normally by the time it's gone through about 5 of these, you're either going to see one of two things. It's either just going to tank and dump, or it's going to go, you know, up. Don't know which one. But yeah, that's breaking over it. Every time it does one of these trend breaks, it's going to be targeting like a range top, like those two were the target for that break was to there. So there's all these little wee trades that exist through all this. What it hasn't done yet, it hasn't targeted that, you know, so that's the first sort of top of that range. And there's a trend there.
But at what point don't you draw another area, because most outer one, the body is started opening fully outside, so a long entry at the trend line would be kind of legit, but then it obviously didn't went to 158. So
no, I mean, you could have entered, like this candle here was your first very risky entry, because you're only on that very first trend break, you know, of the interior. And realistically, the 1 hour is probably too high a time frame for this. Like this this would be something happening at a lower level, like you could be trading a 5-minute trade time frame down inside here. But because time builds from the bottom up, so if you're going to reverse price, the first thing that has to happen is you need to reverse a 5-minute, and probably a 1 second, and then a etc. 5-minute, 10-minute, 15, whatever. It's just got to build up in time. So just taking the first 1 hour break like that's probably not the wisest idea, especially because it's just going to accumulate if it's going to move up. But this is quite a good sign. Like you've got that so far, and you've taken out this range high. Or you at least hit the range high. So that's the first time. So not unlike what we saw today on Sol, we had that spike up, it hit the range high, it dropped back, it found support, it went up. So, and that was only after, we basically said, hey, something's going to have to happen in the next 14 hours. And it went through accumulation and then went up, hit the range top, came down, found support, went up. So it's, again, breaking outside. So
yeah, but when do you then stop drawing areas? Because you can do like this forever, and then you will never have no downtrend.
You could have entered over here. You could have entered on any of these, basically. Anything after about 5, you'd look to enter, and your risk reward would be appropriate at that sort of level, like chucking that. Yeah. Your risk to reward at that sort of level would be appropriate. Any of these. What was the 5th one? 1, 2, 3, 4, 5. There.
Things don't stop running.
What do we get? We get to there. Okay, so this is where you have to make that question of, do you take a really safe TP of there? Because that's still going to be a 1-to-1, and that was that range top. Because that range top could reject the price, and it could break this trend. And if it does, you're going to get, you'll be back below entry. You've got that supporting it. So the trends are raying upwards. So after accumulating, it's now got to distribute. And so, the question is, do you just pussy out, take that, you've made a 1-to-1, or do you go for that? Knowing that this will play out eventually, but it's not to say that it doesn't play out after this rejects it. See? So that did its job.
See, I guess I got a little bit blinded by the FIB concept alone, because when it will go there, just that it will, and
yeah. I mean, it becomes a target for the future. The thing is, like, when does it go there? Versus if you're trading structure, that was a very safe place to be targeting. That's a riskier place to be targeting. I don't know. We'll see. Bye-bye. Yeah, stopped out. So, I mean, you could stay in the trade, and when this candle closes under that trend, you could manually just close out. That's the thing about range tops. Like, there's absolutely no reason why you shouldn't just take a TP at a range top, because it will reject. So regardless of whether it recovers, it will reject. So taking that as a trade and then TPing to wait to see if you find support, to then whatever that support might be, like you'd have to start the old process again of you've lost that, you've lost that, so it would all start here again. You don't usually leave all these on your chart. Way too many. Probably going to be a long time before we go see that. And this was the bear market, so you are effectively trading against trend in the higher scheme of things. Where are we? We're there. Right, so now you're basically starting the process again. So as the price goes down, you just be marking out your range tops, your resistances. And the next one can 50-50 break that interior. Goes. And of course I forgot to mark that range top, but that was your... So that trade is actually kind of done in that moment. So it happened, it hit a target on the break candle, which, and it's got a big wick. So, you know, it's got to get through this trend now, but a bit of a distance created. That's broken trend off range top, so it's created a breakout level, and it's null and voided that because this wick, because the full body is below that trend and the wick is lower than that wick, so you can have reverse trends like that, which sometimes support, but it's not a upward support trend anymore. Where are we at? 1, 2, 3, 4, almost at the exterior. See the price dipped the reverse trend and retraced back above it. So you can take relatively high risk, but you can take trades off reverse trends. There you go. And I mean, that would have been your first sort of target if you'd scalped off that, just a $2 move. So that one candle will have lower time frame ranges, something lower than 1 hour will be inside that, which is why it went back to there. So it's just like you've seen it on a 1 hour chart, but fractally it'll be like a 15-minute chart, having a breakout and targeting range high. Maybe there.
And to me, it looks like that's exactly kind of like the Bitcoin short situation. To me, it looks like it keeps creating downside momentum with all the engulfing 1 hours in this case. I mean, you will find more time frames for sure where it points rather down. So, okay, it goes down in the end anyways, but yeah, I mean, not everything is always completely identical, so.
We. Okay. So this is definitely, you know, a future breakout level at this stage, because it just continually, that range high just continually rejects and its broken trends on its way down. There's actually new support trends in here now. 1, 2, 3. It's a support trend. So delete that. And that's really close. Oh, I don't know. Oh, that's over. Let's see. Just bloody rounding errors. See what happens when you get over that level?
Yeah, that's like even without all the arrays and other stuff, like it's in quote unquote like a breakout, and then price tempts to pop if it's not a wick and to then go down. But
so you look at the pattern, right? You've had a fast fall. You've gone through, you know, say 5, in this case maybe 6, 5 or 6 stages of well, you've created a breakout level, which you don't know until about here, about halfway through, because it has to hit it, reject, and lose trend. So it was created in this moment, this candle made that level into what it is. You go through your accumulation, you build support, and then you capture the breakout level on that candle. Really got to zoom in to see it. Full body close above the line in accumulation, and then you bounce off that, and then you target the upper range high or the resistance. It's going to be one of these two, but in this case it's going to hit the upper range high. And then, as previously mentioned, what does an upper range high do? It rejects, you know, and the question just becomes, does it reject and lose, e.g. continue down, or does it reject and recover and continue up? Because if it rejects and continues up, then yeah, you're looking at these higher levels. And then up here, as previously marked, you know, you've got another breakout level where it tried to get over the range high and rejected. So meanwhile, we're getting closer to that original exterior trend.
Yeah, but in hindsight, those things make sense. But while it's ongoing, why not take an earlier long in those support creating accumulation candles? Or would you rather wait for the breakout after and only observe and maybe put alerts or whatever, and then
I guess it just
have a quick
depends on your risk tolerance, really. Like
Because it could have easily failed and put another leg down, you know. So we are looking
Yeah.
now at it like because
Yeah.
it happened, but
I mean, a future breakout level is only worded that way on this chart. You know, you should probably just call this a future breakout or breakdown level, because the point it's really just a pivotal level where if it can close above it, it's going to, you know, there will be volume come in and it will go up. All little algos will suddenly be like, oh, it's time to buy, you know, and off it goes, until it runs into the ones up here that say it's time to sell, you know, and then down it goes. But until it's flipped, its job is to reject. The thing that sort of says that it's failing is the holding of a trend. Because if you were just, you know, shorting this, as an example, you were taking some short on this, the closer you get to this point here, you know, the worse your risk is. Because if this is support, your best short is probably that one. The next time it comes up and touches this, you're probably not going to want to go near it for a short, because what are you going to do? Short just back to here? Like it gets too risky. So anybody who was shorting this level, as this started to travel up, is just going to stop, and so therefore, you know, it's going to punch through it. That's kind of the mentality behind it. But then this becomes another level where everyone's just, well, we're miles away from trend. Let's short it. And where we're going to TP? We'll TP at trend, which is why you get that buy back there, effectively. Is trend hold? No. Keeps going.
I mean, this aligns also very well with things like volume profiles. Obviously, you have support at the bottom, you have some resistance at the top, and you will find then volume gaps, and price tends to move very quick between volume gaps.
Yeah.
And in this case, it just dumps through.
Cool.
So no fucks given about support in this case.
There you go. So once it's hit that there and rejected, it's done its job. It's confirmed this range high is now a future breakout level. So if it gets above there, you'll get a breakout. Fair to say that resistance has been tapped, and your process would have started. This took off really fast, but your process would have started again, like so. And then that would have been your first. So the difference here, and why you might choose to take a trade on the first candle, is because of where your ranges are. Like this fast drop created that trend, so it adapted. So this was there. This candle doesn't break the trend, this one does, so then you move that to there. This can't break it because it opened above it. Therefore, when it recaptured it, found support, broke an interior, first targets there, second targets the range high there. You could have just marketed in if you wanted to and taken along on the close of that candle, and then gone up. And it's hit the range high, and the range high is rejected because that's what range highs are meant to do. And there it's back into the old game of, you know, there's another trend in there too. Oops. And this trend down here is not broken.
So now we look at it as it did pop, but would you have longed, for example? I mean, there are so many assets to long or
Yeah.
short. But would you have longed the second yellow candle after?
That
Yeah, this
that
one.
that close right there. Yes. Yeah.
Yeah.
That's a really
But
obvious.
only the closure. That's my actual
Only-
question. Not like
only
the
only when it closes. Yeah, only when it closes. Because you don't know how long this is going to dip down. You don't know if another one opens and then closes in distribution, breaking that trend from a lower level down here. Like that's all very unknown. But you know what's going to happen when it breaks that trend with that support. It's going to go
you
to
wouldn't have
there.
not long on the trend line that's going from the bottom left to the right. So through the blue. Yeah, this trend line. You wouldn't have long at that, or is it like risk appetite and you wait for the closure, which is a safe bet, but the insurance you pay to have a worse entry but a safe trade, or?
I mean, you could have longed on the close of this. You wouldn't have longed. You wouldn't have longed this.
This makes sense to me, yes, but
because that could have just gone to there, to there, to there, to there. You know.
Yeah. All good.
So yeah, you wouldn't have longed that because this didn't exist at that moment in time. None of this. Set a replay tool. Yeah, so at that moment in time, you're too far away from this to do anything.
Yeah,
this
that makes sense.
Hasn't recovered. Probably the very first time you could have longed that with more risk attributed would be that, the close there.
Yeah.
And
then SL below wick and
yeah. But if you did
out.
If you did that, you'd probably only target either that, because it's fractionally above that wick, or that. Like if you took that long, it would just be the here and here, which is a bit risky because the long, because the wick on the top of the candle is quite high. So you've created. Oops. Oh no, you might no. So what you're kind of looking at is you're looking at the steepness of the trend, and you're looking at where the corner of that candle is, and you're going, okay, when the next one opens, it's going to be on the correct side of that trend. I've regained trend support. I've got some resistance fractally in this, and I've got resistance here that's going to reject. I've got this trend here, which is going to try and reject. And I haven't broken technically this one yet. So if I long this, where do I long it to? I probably long it to here. And anything more than that, there's variables that just haven't been created yet. And so you take that long and you win. And then it rejects. And then it goes to town and goes to the upper end of the
your map because it would be too early.
Yeah, and then it goes to the range high, which is sort of the predictable thing of a trend break, is it's either going to go to here, being the first resistance, because the backside of this is designed to hold that price down and continue the downwards laddering, and then the upside here is going to break to try and, or it has to hit that if it's going to break. If it doesn't hit that, it just can't break. So it doesn't mean it will, because it's got to get above it and close it.
The time frame you, I know we always talk like about all time frames, and it's for sure higher time frame stuff is more important, such as older stuff is, but is the 1 hour actually one you spend more time on to draw these things out and then dial in or zoom out respectively, or it doesn't really matter?
I would sort of go monthly, weekly, daily, 4 hour, 1 hour, 15 minute, 5 minute. That's sort of that. If I was manually trading everything, those are probably the key important ones. But but then sometimes the structure will just look cleaner on a certain time frame, and a lot of it's to do with trend. It's just, when do you get a trend? Like, because it takes a long time potentially for a 1 hour trend to form, but you'd already have a 15-minute trend. I mean, there'd be 1 minute trades just in that area right there. Like being all fractal, just get rid of all that. Just go down to 1 minute. And that, if it wasn't for the fact it said a 1 minute chart, does it really look any different than a 1 hour? No, it's just price moving. So
No, that not. But, which one makes most sense while actively doing so?
I think it depends on two things. The movement of the token. So like, if something moves an average of 5% in a candle because it's an absolute shitcoin, you can probably quite successfully trade that and make money off a very low time frame chart. If it's making 5% on, say, every 1 hour candle, then sure, trade it on a 5 minute time frame. 1, 2, 3, 4. That one?
No, that's inside. Looks like.
Touching on the corner, eh? Yeah, touching on the corner. So the next one's that one. So 1, 2, 3, 4, 5. Range high. There. That's your candle you enter on. That's your target up there. You might TP there at first resistance. So it's not any different than a 1 hour chart. It's just a 1 minute chart.
Yeah, I know, but just for the ease of what has experience brought you to, maybe not. But you're right. Depends on what you do. If you're looking for ultra large, prolonged swings, then you make it on a weekly and monthly, and then go on vacation or whatever. But if you're scalping, then you're hanging on the 50 minutes rather.
Yeah, it depends how much time you've got. Like someone who's working a full-time job, they might just want to enter on a daily structural change and let it go and swing. Someone who's got all day to sit behind a screen might just want to compound their money really, really fast by trading low time frame charts on tokens that have fast moves. That's a lot of it just comes down to what time you have.
On this particular example, if you remove the outermost right trend, only the last line, only the right pair. If you
that one,
that's actually also like a breakout and potential long, right?
100%. It's that one. You are correct. Yeah. Right there.
Yeah.
So it's actually technically, I think it's that range top. But once that range top is broken and closed over, it's going to go to the next one, and so on and so forth. So it's like a succession. And somewhere in here, that is a breakout level. So range, broken, loss of trend, retest, loss of trend, close over, boom, volume. Notice where the main volume. See how all the main volume comes in here?
Yeah.
So there's like there's an order to these things. Like they're meant to do certain things, and when they don't, they get pissed off, and then in future, they therefore react aggressively. That's kind of the way I think about it. So the purpose.
Why is this exact candle the breakout level, not the one to the left? I would have chosen the larger one to the left. But why do you choose this one?
So you've got two candles, which is a downwards range. You've got a break above and rejection, which leads to a break of the trend at the moment. So that's, boom, hits it, comes down, breaks trend, continues down. So that was a really pivotal moment where price had decided it was going to go up. Like it didn't happen here, right? Because you've got down, up, down, one, down, down. That was your first range, and then that was your first range to be broken in the direction of a reversal. But it didn't reverse. What happened is it went the other way. So kind of complete rejection. Now in future, when price revisits it, it gets, I guess you could say it gets qualified, like this is, it hits it again, breaks the trend of the time. So this is a key point, right? AKA breakout level, or breakdown level, like what do you want to call it? Its job is to reject the price or send the price on a fast move up, all based on what side it gets closed on.
Maybe I'm too stupid, but the candle exactly to the left, or two to the left, the other blue to the left, yeah?
This one?
This one? Why doesn't this do the trick? The explanation sounds similar and also functions as like resistance.
Well, it
Just front.
so it technically would, apart from the fact it was never tested until all the way over here. So
Yeah.
it wasn't a breakout level in this moment, and it wasn't on this time frame. It'd be sub 1 minute. So whatever's in there is under a minute. So that's
okay.
Yeah, because it's just one candle, so it'd have to be. So this could have been one, and that was probably what was tapped. See that there?
Yeah.
Yeah, so that could have been one, but the thing is it wasn't tested back here. It was only first tested over there. So as a range high, that was always going to create that rejection over there. So that's just like instant short. If just put a short on every range high, you'll be a millionaire pretty quickly. There could be something in here, but again, it would be sub 1 minute. The first one that is a 1 minute breakout level is that one.
Sorry, can you explain it again? Why this exact candle it is? I understood now why the others are not, but
so it's the array is
the same for me.
Range high of a 2 candle range. 1, 2.
Range high of the 2 candle range. And the other ones are the prior one is the solo candle. Okay, yeah.
Solo candle.
Noted.
So that would be the range high of a, I don't know, 30. I'm just making up numbers now, but that could be like the range high of a 10-second range.
Whatever. But we are in the 1 minute right now, so
correct. And that was the range high of a 2 candle range, which is why it gave that rejection.
Yeah.
Yeah. So in
the middle was then noise. What kept saying like this flip flop 1 1 1 1 is.
And this here, like you see that one right there. That's a breakout level as well, right? And so you've got that as actually one. And in the moment at this time, that was the only one on the chart. But this price and the way this price behaved when it got to here actually created that as well, because there's no accumulation candle. And in actual fact, that is probably the level. Like looking at it, that is probably the level that sent the price flying, and it's probably higher time frame just because there's more candles. But that closed under it. That was on it. That was on it. That was under it. That was on it. That was on it. That broke it down and broke trend at the time. So this actually becomes a level here, and you do quite often find this, like, because fractally they're on different time frames. Like this is a 1 minute, this is a 1, 2, 3, 4, 5. This is probably a 5 minute breakout level, and it's sitting just inside of the 1 minute breakout level.
Yeah, but this makes a whole lot of sense because it was battling it, but could never open up one above, and then it failed.
Yeah, and you see that this candle here,
and then
this 1 minute candle here was 0.44 UTC, So it closed on an increment of 0.45, so it closed on a 5-minute increment above a 5-minute structural breakout level. So that's the one, like the actual level that created that to take off. Probably why that didn't stop it, because there'd be something bigger back here. You can just go there, 1, 2, 3, 4, 5. Pretty close. Yeah, so something back here had to stop it. 1, 2, 3, 4, 5. Yeah. There you go. Range high. 1, 2, 3, 4, 5. Target. So, like, you can get really complicated and advanced and find all of this shit in a 1-minute chart based on when candles open and closed, how they break out, and the time of the day and the amount that are in the sequence. And effectively, that would have been like taking a 5-minute trade, but on a 1-minute chart.
Yeah, it sometimes sounds sketchy talking about 1 or 3 minute time frames, but I dial into those a lot because volume changes at 1, 3, and 5 minute matter so much for reversals. It's insane. So
Yeah.
you often have like just a few seconds to pull the trigger because you see the volume kick in on the 1 minute or 3 minute, then you look if it's distribution or accumulation in the 1 minute, and then you check, okay, do we have structure on the 5 minute, and then you flip flop as fast as possible and then pull the trigger or not, and then out of nowhere price pops either way depending on what direction you're looking at right now. And it's very fascinating how much these very tiny fractional minutes really matter for optimizing entries.
Well,
Or
it all
exits.
it all has to start somewhere, right? So like, if you're looking at a reversal, it's not going to start on the 1 hour. It's, you know, the reversal of a 1 hour downtrend is going to start on a 1 second chart, which we're not going to watch, you know. But
Yeah, we should probably.
but finding it on a 1 minute is a bit more reasonable. And if you get a couple of 1 minute ranges breaking to the upside, well, then that's going to be a 2 minute or a 5 minute or a 15 minute chart or whatever, depending on how many candles. But they all go through the same process. The trends have to get broken, the trends have to compress, it has to accumulate, and then it will break. And then at that point, it'll have a target. And depending on which target, whether it hits resistance and ladders down, or whether it hits a range high and continues to ladder up, it gives you a pretty good idea about, you know, what's going to come next. And then it just continues to play out exactly the same way. Yeah, so that was your 5 minute move.
Yeah.
And then was your 5 minute resistance.
Just to give an idea what I'm talking about. I mean, so many things often lead to the same result if you are able to fetch those things. But just as an example, if I share quickly, if you really want to go into low time frame trades, even if you ignore the lines, I mean, it's an important resistance here. Can you see my screen? Yeah,
I think I just brought up my screen. Hey, I can hear myself. How do I kill that?
I don't know. Maybe mute. Oh no, you have to make yourself right-click yourself, and then I guess the sound turn sound off.
I just stopped my. Okay, I can still hear myself.
So if dialing into this, if same procedure as every year, one could say, if watching Den of 1, you have like major resistance looking to the left, obvious level, either from the left here, from the support resistance flip right here, and generally 89k is historically to the left an important level, being the low of this fallout wick. So it's a lot of happen will around this time. If we break through, that's a
I actually-
rather continuation thing.
I think you're on the wrong screen.
Oh, fuck it. Sorry. Just a moment. Where is it? There you go. Do you see trading view now?
Yep, that's right.
Okay. So we have the fallout wick low here, which kind of marks on multiple reasons the fact if we are still in a bull run or not, if hold or not. Then if we dial into like the 1 hour, you have same. Let me turn off TRM quickly. You have this structure here, which is obviously resistance. You have this support, then flip into resistance now latest. And if you then dial into the 3 minute and we turn on TRM again, which colors the candles very nicely, then you get, if you go into the structure, it keeps rallying, and then you see it starts to lose steam, but keeps cringing upwards and prints these blue stopper candles, which have 150% more volume than the last candles on average. And you see in parallel this exhaustion here on the RSI. That's why I mean multiple things often lead to the same result. Then you see this bearish divergence here, and all these stopper candles go into this obvious major resistance. That's like either this candle or this candle, depending on risk appetite. Maybe already this one, testing this high again, could have rejected and fall out instantaneously, but probably went a little bit higher. So you could DCA into it, put an SL here, and simply just short it right away and take then the obvious. I mean, it's hindsight again now because it already happened, but even if we are not looking hindsight to it, that's how you can play volume very well going into this, because that's where a lot of longs will also come and say, yeah, we're going to the moon, but we are structurally at a very important resistance level, lose steam while going up. So you have a bearish divergence, going higher, but going lower here. And that's a very good lower time frame entry, especially if you see all these stopper candles. I call them so, or the creator calls them stopper candles, because they attempt to reverse the trend that's currently in. You also find them at the lows, which is also very nice for longs, like this one. Was an obvious long, even if it's only for a scalp. You have a huge dump, then you have a stopper candle, and price shoots back up.
If you wanted excuse me, a really good confirmation short, jump back up the top. So you've got everything you want there, which basically says this thing's going to tank. Just go through one candle at a time, and I'll comment on them. So yeah, keep going. Okay, stop there. So you've basically just broken. You haven't closed it yet, but you've broken that range at the top now. So now go one more. Okay, not that one. That one. That confirms it's broken. And then the next one will probably look like it's pushing up against something and failing to move back up. Yeah. You might get a couple more like that, and then it'll just tank.
Yeah.
Yeah. And then after that, it should just be gone.
Yeah, that's where you either have the risk appetite to go earlier on signals, or you wait for confirmation, because, as I said, it's like breaking structure, at least for the most part, and then enter somewhere here or here on these candles.
The real thing is not to be entering any trade based on the current leg. Like the real thing is to look what's happening over the left, because that whole thing is started by something in the past. And
Yeah, that's what I explained earlier. Yeah,
Mm.
that's an inflection point for many reasons. Is it this support resistance flip? Is it the prior structure to the left? Maybe if we
it's-
draw arrays, we also find something. I'm pretty sure we will do. And mainly this, I should mark this line and make it another color, or say key level, because this range low here is extremely important for continuation or failure, just being the wick low of this whole chop range.
yeah, so that'd probably be one of those ones where we don't want to be closing the weekly under that.
Yeah.
A full
That's
body
absolutely right.
a full body distribution weekly, just to clarify.
So not the running one, but if the next one
Yeah.
also closes completely below, even if it's
Yeah.
accumulation, does it count?
No,
No.
it's got to be distribution.
So if we
it's,
do like close like here and close the next one like this,
yeah,
that's
yeah. If the full body of that next one is below that line, it's yeah, not a good thing.
yeah, that I would agree. This is also not a good thing. I mean, even a poor eye could see that's the usual blow of top. Historically, we spend about 2 months after the last top in distribution. Also up and down, up and down, up and down, but let's call it generally distribution. And then it actually really rolls over and falls off a cliff. I know we have the arrays, I know we have still chances for upside, but if we don't get the upside, let's also not be surprised.
No. Either way, it needs time. You know, like it's from a weekly perspective, you're too far away from your weekly trend, from your weekly exterior, and you don't even have an interior really on it yet. So it just needs time. Be no rush to buy. There'll be plenty of opportunities, I think.
Yeah. Okay, yeah, that was just one example. Sometimes too many lines, but on the range lows prior, it's where also a lot of action happened around for obvious reasons, either support or resistance. That's why I was surprised a bit today, because it smooth sailed through all of this after taking the Psylo. I even hedged long here when I see it took it and then retested it. Then I hedged long to take a bit of upside. But yeah, smooth sailing through all these resistances was a bit awkward. But what do you know? The major short pool was sitting exactly here, and that's what Price did. Go there and then tank.
Yeah, it looks. We're on now, 86. The good news
note
is
of you earlier there that what comes first, the shorts and longs, or the
Yeah.
price structure that points towards that? It was is a thought I would take with me for sure.
Yeah, well, that was maybe I'm just optimistic, but we got 5 days. This can't break. But you almost don't want it to. You almost don't want it to flip up. You just want it to just get there. That'd be a great little spot. If it actually went back and tested that, just there, and opened the next candle, it'd be on the correct side of trend to then actually break 50-50, but still at least on the correct side. And it's not actually totally out of the question because that's what it's supported off.
Yeah, there are good arguments for both sides. At the moment, the bears obviously have the edge most of the time.
Yeah. Yeah, someone keeps selling.
Yeah.
Alright. Were there any questions in the chat? What do we got? Assuming an uptrend, do hold levels and inverse levels located above price have equal probability of rejecting the price? Inverse levels are generally stronger, would be the answer to that. But if you're trading, you just TP at whatever one is first, because why risk it? And inverse levels would probably be further back in the past, because they, like, the whole thing that made an inverse level was that it was support at some point, so, or it became support at some point. So it's probably going to be further back in the past. So it's, so one, it's going to be stronger. Two, it's going to be older. And three, it'll probably be smack in the middle of an FVG in the current leg of the move. If that all makes sense. So yeah. Oh, there you go. Perfect answer.
It certainly doesn't help that these downswings and then little up thrusts create more and more liquidity all at the same spot. So despite the candle breaks pointing at 77k and so on,
Can you
not
please
really
explain?
convinced. We just go higher.
No, well, I mean, for the most part, we're basically bouncing between inverse levels, because there's no normal structural levels in here. So it's all, we're just bouncing between inverse levels, and inverse levels give pretty strong, fast reactions. So you're going to bounce from one, you're going to travel a decent distance, you're going to smack into another, you're going to travel the other way, and it's just going to keep going. Like, it's a bitch of a time to trade, because they're the hardest thing to find, for one. They don't really care about time frames. Like, you could have something on a 5-minute time frame that'll stop a weekly move. It'll send it the other way for a while, and then it'll come back, you know. So it's kind of, yeah, it's just a crick of a time to be trading. Can you please explain how you drew the 5 lines of the anterior trend again? Okay, so so first accumulation to accumulation. Obviously the other way around if you're looking for, you know, a downside break. First one, and then whenever the next candle is completely clear, so body, the wick can touch, but the body just cannot be. So that's that then makes that number 2. So 3, so that's on it, completely clear of it. 4. 5. Okay, so you've got 5, you're stuck under this one, and you've got your first interior there. So now you've got 5 in distribution. You'd sort of be thinking, okay, it's probably getting pretty close to looking for our entries. And 2 interiors. So your first interior is actually starting to break. You could just enter now. Like this is probably, I mean, we know in hindsight this was basically the bottom for Bitcoin, but 1, 2, 3, 4, 5. There you go. And break your exterior. And so could have been buying sort of anywhere from about 18 to 20. You'd be looking for, so once it's broken that one, you're sort of looking for what is going to support the price, and this had already supported the price here at that point. So you'd probably be looking for something a bit lower, and it'll be based on that wick and that candle and the weekly time frame, it'll be some kind of inverse level inside there. The problem is you can get too greedy and then you just completely miss your trades, which does happen. Like that would be a relative, oh, that's ahead of the line, sorry, that's not right. That's what we used to support that first bounce, which broke trend. That. Was broken, not that. It was 2. It's never been tested. Probably that. There it's kind of in that structure there. So anytime you sort of see a dip down and a fast reversal, there's going to be some kind of inverse level in there. Just got to find it on what time frame it is and mark it out and wait 2 years. And we go into a bear market and we go through our 5 levels of distribution. Creates the first interior trends, breaks them, goes and finds support at some point. And off she goes. Bull market. Does that kind of explain it? When you are marking the trends under one time frame, like 1 hour, 4 hour, do you always work down to 3 minutes? I mean, bigger ones are stronger. You can refine a trend down through time frames to try to find a more accurate entry price or break price. But that's kind of the same as using interiors. So let's just stop that. So if you were to take so if you had that as a trend as an example, and then you went down to 1 day, you can find the pivot point in the trend, which is here, and you could move it to, say, that candle there. And so now you're looking for a 1 day candle to break that. So it's basically changed it from being a weekly. And that doesn't do it. It's, oh, maybe it does. Nope. Doesn't do it. That does it. So you could take a punt on longing that, but the risky thing is that that's the target, so it's pretty close. If it got over that, then that's the next target, and then if it got up to there, you're doing well, but that's your first target, and it's already at the first resistance. Get the second one. Yeah, so I got the second one, and it rejected from there. So you just wouldn't trade on that candle close, just purely because that is very risky. Just taking that. And there's no guarantee it was going to go there. But that's a level worth marking because it creates a daily breakout level for the future. Yeah. Okay. So your daily trend keeps on rejecting until it doesn't. This is a much nicer trade because your first target level was this or this. So yeah, when it broke over that one, you were going to get a better move. And else in there worth looking at? That was an inverse level, so that's an inverse level. So if it closes over that, which it is, where's that going to go? Know where that's going to go. Down. And so if you're taking that trade, you would have just either TP'd there or based on risk appetite, maybe gone for that. And the thing about hitting that range high is it's going to reject. So even if you TP'd there, the price is still going to go down. Even if you think it's going to go up, you've got the opportunity to re-enter after you have confirmation that it is going to go up. So I actually don't understand why most people don't just TP at range highs and then sit back and wait and then re-enter again when they get confirmation. It's kind of the same as compounding your money. From user Cav in the trading channel. So can anyone explain to me how Sim draws his support and resistance boxes? Right, so to say, for example, that was our moment in time. The wick of this first distribution candle is the higher the range, it's going to be some form of resistance later. There's also an inverse level in here because that wicked up so much and came back down. There's already a lower time frame inverse level inside there, and resistance is going to be there. The resistance is like this point here is designed to try and keep price laddering down. So if it does this, if it comes up here, hits that, and then just keeps on going, that's just a downtrend. Like that's how they work. If it comes up here, hits that, it's trying to reverse the downtrend, and then if it can actually close up here, then it that's when trend reverses. So these are both resistance in the moment when the price is down here, and likewise there'll be supports which are just the opposite. So there'll be a range high, and so if you flip that chart over, this was designed to create that rejection. If this got broken, then price would be able to continue moving in that direction. So it's all, that's a different time frame, clearly, because it's too many candles, but hopefully that explains it. Thumbs up. Cool. Hey, soul's pumping. Any more questions? You are welcome. Okay, well, if there's no more questions, I will go and... It's a bit early for lunch. It's not too early to drink, though.
All right. Thanks for the session.
Yeah, no worries. All right, catch you all later.
Bye-bye.